Donald Trump this weekend came out with what could be one of his worst or best, you gotta ask him, ideas financially that we've possibly seen in a long time when it comes to the mortgage. He's proposing changing it from a 30-year mortgage out to a 50-year mortgage where you pay for an additional 20 years of principal and interest on your mortgage before you pay it off. How does this work out for you? Does it actually make housing affordable again? Let's take a look. On a $1 million loan, your payment on a 30-year mortgage is $6,186. Now that's just the principal and interest. You still have to pay taxes and insurance, possibly HOA. But if you drag that out over 50 years and make an additional 20 years worth of payments, your principal and interest payment drops to $5,942. So a $244 savings. Is that enough for you to pay in an extra 20 years on your mortgage? If you're working with a different loan amount size, go ahead and just take the $24.41 savings on a 50-year mortgage versus a 30-year mortgage applied per every $100,000 you borrow. Now, what does this do to prices if we drop everybody's payment a little bit? I personally think a little bit about student loans. It's not going to be as drastic, meaning student loans, you don't have to make a payment while you're going to college. But what did student loans do to the tuition costs? It sent them sky high. So I would expect that $24 per $100,000 savings does impact the market, especially in middle America a little bit, and we start to see price appreciation that wipes out the entire savings. So you tell me, do you want to pay for your mortgage for an extra 20 years or not? The 30-year mortgage seems like the right balance of principal and interest where you still pay a lot in interest over those 30 years. So it's just not enough savings, in my opinion, to impact someone's budget to make it worth paying an extra 20 years on your mortgage. Let me know what you think.